Hi, and welcome to this week's Naples Market Update. And it's all about inventory levels. Because when buyers and sellers hear that inventory is shifting, they often assume that one of two things. So the buyers that I talk to may assume prices are about to fall everywhere. And the sellers that I talk to assume the market is still strong because Naples is Naples. But the real story is more balanced than that. Inventory levels are changing, and price reductions are still high. Buyers have more choices than they had during the peak market, but this is not automatically a buyer's paradise. And it is not a market where every seller is in trouble. The numbers show something more specific, and the Naples market is still active. The buyers are becoming more selective, and the pressure is not the same in every part of the market. I'm Chris Alley, a Naples, Florida realtor since the year 2000. I'm a certified luxury home specialist and pricing strategy advisor. Each week, I break down the Naples, Florida real estate market so buyers and sellers can understand what is actually happening behind the headlines. And this week, we need to look closely at the inventory levels, the months of supply, the price reductions, and the difference between inland value and coastal luxury. So let's get started with what the median sales price is this week. It is $595,000. So over the past 7 days, Naples had 170 new listings. It had 150 sold listings and 162 pending listings. There were 49 terminated listings, 35 expired listings, 25 homes back on the market, 47 extended listings, 50 price decreases, 89 price decreases, and 50 withdrawn listings. So right away, we can see two things happening at the same time. Buyer activity is still real, but the sellers that are around are still facing pricing pressure because we have had 153 sold listings and 162 pending listings. Together, that is 350 homes either sold or going under contract. That is a meaningful amount of movement compared with 170 new listings. So this is not a dead market. Buyers are still acting, but there were also 189 price decreases. And guess what? That tells us buyers are not just accepting any price. They're comparing the value and they are watching the condition as they should. They are studying the fees, the taxes, the days on market, and competing inventory. And these are all questions that people ask me when they are moving here to Naples. And when the price does not make sense, they are waiting. Now, let's talk about the bigger inventory picture. Because we started this with inventory, so let's talk about that. The overall Naples market had 6.3 months of supply in June of 2026. Now, that is higher than the very tight market that we saw in 2023 when June had about 4 months of supply. But guess what? It's gone down. It is now lower than June when the market had about 9.7 months of supply. So inventory is going down and months of supply is going down. And that's important to the people that are looking to buy a house and sell a house. If we only look at one headline, we might think inventory levels are ballooning out of control. But the monthly supply data tells us a more careful story. Inventory levels are still higher than they were during the tighter 2023 market, but they have actually come down from last summer. And that is contrary to what you've been hearing all over the media. That means I would not call this a broad buyer's paradise. A buyer's paradise would usually mean too much inventory and weak demand and sellers competing heavily across the board. But that is not exactly what the data is showing. What the data is showing is a more selective market. There is enough inventory to give buyers more options. And let's face it, buyers do want options. There are enough price reductions to create opportunity. And there is a lot of opportunity. But there is still enough demand that the right homes are getting absorbed. That is why the next move in Naples home prices will depend on the type of property, the location, the condition, and how motivated that the seller is. So let's talk about inland inventory and coastal luxury. Those markets do not behave the same way. So when you're talking about the inland areas like Golden Gate Estates, it may give buyers more space, newer construction, no HOA, and more flexibility around the median sales price. But when you're talking about the coastal and boating markets like Port Royal, Aqualand Shores, Old Naples, the Moorings, Park Shore, and Pelican Bay, those are driven by scarcity. Those are driven by a different motivation. So there is only so much waterfront. There is only so much direct Gulf access. There is only so much walkable beach area real estate. So when inventory levels shift, you have to ask, inventory of what? Because people will talk about inventory. They'll talk about days on market. But in our market, in some areas in particular, it's a discretionary purchase of a vacation home. Are we talking about inland single family homes? Or are we talking about older condos with higher fees? Are we talking about gated communities? Are we talking about luxury waterfront homes? Because those are very, very different markets. So now let's take a look at all those different markets. Now let's take a look at the homes that sold near or below the median sales price this week to talk about these type of markets. The first example was in Naples Twin Lakes. This home was listed for $599,990 and it sold for $585,000. It was a 3-bedroom, 2-bathroom, single family home with 1,451 square feet. It sold for about $403 per square foot and it was unfurnished. It had no HOA and the tax bill was $4,625. So this matters because it gives buyers a closer in Naples location with no HOA. It's near the beaches, shopping, marinas, and golf options. So even though it sold below the median sales price, the buyer was not just buying square footage. They were buying the location and flexibility. And the second example was in Golden Gate Estates. So this home was listed for $585,000 and it sold for $585,000. It was new construction. It was built in 2026, and there's a lot of homes like this out in Golden Gate Estates right now. It had 4 bedrooms, 2 bathrooms, 1,650 square feet. It sold for about $355 per square foot, and it was unfurnished because it was new construction, no HOA, and the tax bill was only $1,085. This example shows why Golden Gate Estates continues to attract buyers who want land. They want newer construction and fewer restrictions. But the trade-off is that you are further from the beach and the coastal lifestyle corridors. But for buyers who want space, no HOA, and a newer home around the median sales price, that trade-off may make sense. The third example was also in Golden Gate Estates. It's a very popular neighborhood right now because the home was listed for $625,000 and it sold for $595,000. It had 3 bedrooms plus a den, 2 bathrooms, and 1,737 square feet. It was built in 2022, sat on 2.73 acres, and had no HOA. The tax bill was $5,209. And that sale is important because it shows us how much that the details really matter, because both Golden Gate Estates examples had no HOA. Both gave buyers land and flexibility, but the second one had more acreage and a higher tax bill. So buyers cannot just say, I want Golden Gate Estates. They still need to compare the lot size, the location, this condition, year built, insurance, tax, future plans, or the property. Now let's contrast that with the luxury sale of the week. The most expensive home that sold this week was in Port Royal on Gordon Drive. It was listed for $39,995,000 and it sold for $36,500,000. This was a furnished single family home with 6 or more bedrooms, 8 bathrooms, and 9,000 square feet of living space. So that means that it sold for about $4,022 per square foot. The property had 120 feet of water frontage, approximately 5 feet of shoreline, wide views across the Champney Bay, and dockage with multiple lifts for large vessels. The tax bill was $88. That is obviously a completely different market from the median sales price examples. But it is important because it shows why coastal luxury does not respond to inventory levels the same way as inland inventory. A Port Royal waterfront property is not easily replaced. A buyer looking for that kind of boating access, the water frontage, the elevation, newer construction, and the Gordon Drive location is not just comparing it to a new construction home in Golden Gate Estates. As a matter of fact, they're probably not even considering a home in Golden Gate Estates because they were looking for certain things. They are comparing it to a very small set of rare opportunities. And that is why broad Naples inventory levels can be misleading. Again, we're talking about inventory levels. The overall market may have more supply than it did a few years ago, but the supply of truly rare waterfront properties is still limited. At the same time, even luxury sellers have to respect the market. This Port Royal property sold for $36.5 million, which is a huge sale, but it did not sell at the full list price of $39,995,000. And that tells us that luxury demand is still there, but buyers are still negotiating when the numbers support it. Now, let's talk about the days on the market. Days on market is often one of the first signs that pricing pressure is building. Before pricing adjusts, homes usually sit longer. Showings slow down, buyer feedback gets more consistent, or it completely does not exist. Sellers start hearing the same objections. Then price reductions begin, and this is why days on market matters so much. There is no exact day when every seller becomes negotiable, but in general, the first few weeks are critical. If a home launches and it gets strong showing activity quickly, the seller may still feel confident. But if the home sets for 60 or 90 or 120 days with limited movement, the conversation can start to change. At that point, buyers may have more room to talk about price, the repairs, the closing costs, the credits, or other terms. So that does not mean every long days on the market listing is a deal. Some are still overpriced even after reductions, but longer market time is one of the signs buyers should watch. And sellers should watch it too, because the longer a property sits, the more buyers start asking, why has it not sold? Now, what do current inventory levels mean for future Naples home prices? I do not think that the data supports saying the entire Naples market is about to become a buyer's paradise, although you do see that the numbers are going down. But I do think the data supports saying that sellers have less room for pricing mistakes. With 189 price decreases just this week, buyers are clearly pushing back. With 170 new listings, 153 sold listings, and 162 pending listings, the market is still moving. And with 6.3 months of supply in June, the market has more breathing room than it had in the tightest years, but not the extreme oversupply that we saw last summer. And let's face it, last summer was brutal as sellers and real estate agents. There wasn't a lot being sold. Look at the inventory statistics. So the likely direction is not one simple answer. Well-priced homes in desirable locations can still sell. Overpriced homes may sit and reduce. Inland single-family homes may face different pressure than rare coastal or boating properties. And older condos with high fees may behave differently from newer single-family homes with no HOA. And the luxury waterfront homes may still command major prices, even if buyers negotiate. And that is why buyers and sellers need to look deeper than the overall market number. For buyers, the strategy is to watch where inventory levels are creating real leverage. Look for longer days on the market and look for the price reductions. Look for the sellers who have extended or withdrawn and come back with a new strategy. But here's some words to the wise. Do not assume that every listing is a bargain just because it has been reduced. The question is whether the new price makes sense compared to the recent closed sales. For sellers, the strategy is to price to the current market, not the peak market. If your home is in a strong location, that helps. If your home is in excellent condition, that helps even more. If your home has water access, beach proximity, it has golf, gated communities, gated amenities, or a rare lot, that also helps, as you know, because you bought the property because of that same reason. But it does not give you unlimited pricing power. Today's buyers are informed and they can see the inventory levels. They can see the price reductions. They can see the days on market. And they are comparing your home against every other option available. So here is the final takeaway for you buyers and sellers. Inventory levels in Naples are shifting, but not in a simple way. The market is not collapsing, and it is not a buyer's paradise across the board. It is a selective market where pricing, condition, location, and total ownership cost matters more than ever. The broad numbers show buyer activity is still present. The price reductions show buyers are pushing back just a little. And the months of supply trend show the market has more inventory than the tightest years, but less than last summer, which those are all the headlines. Everybody always wants to talk about the recent past. And the contrast between Golden Gate Estates and Port Royal shows why every segment of Naples needs to be studied separately because those are two different types of buyers and sellers. So for buyers, this is a time to be prepared, be patient, and be data driven. For sellers, this is a time to be realistic, be strategic, and honest about where your home fits. I'm Chris Alley, Naples, Florida Realtor since the year 2000. If you want to stay current on the Naples, Florida real estate market, subscribe to this channel for my weekly market updates. And if you're looking to buy or to sell, take a look in the description below. There are buyer and seller guides that you can download completely for free, no strings attached. I'll see you on the next Naples, Florida market update. And remember, people like you call me each and every day. Bye for now.